Let's get started.
Welcome to the Financial Purpose Podcast. All opinions expressed by me or guests of the podcast are solely our own opinions and do not reflect the opinion of Life Moves Wealth Management. This podcast is for informational purposes only and should not be relied upon for any investment decisions. Clients of Life Moves Wealth Management may maintain positions in the securities discussed in this podcast. Hey there, welcome back to the Financial Purpose Podcast. I'm your host, Dale Schaefer. This is episode 83. Thanks so much for joining. Today, I'm going to have a little bit of fun. This is going to be a bit more personal of a topic because this week marks my 10th year in the advisory business, and I cannot believe it's been 10 years. It's gone so fast. And it's a lot of fun because for 5 of those years, I've been fairly independent. And for 3 of those years, completely on my own with Life Moves Wealth, which we just celebrated also in the month of May, our 3rd anniversary of having regulatory approval to operate as a registered investment advisor firm. And so it's been a great 3 years. The firm is growing. It's been a great 5 years since I've been, actually almost 6 years since I've been here in Arizona and running the business completely on my own at that point. And even before then, I learned a lot. So I want to talk about in my 10th, as I celebrate my 10th year, I want to talk about 10 things that I've learned over the 10 years in this business. And these are in no particular order. They're just kind of the first 10 things that I really thought through that would be important. So some of this, like I said, I'm going to share. Some of it's going to be kind of personal, things that I've learned personally. Some of it's going to be what I've learned about the business and about people. So I hope that you enjoy this run through. So the very first thing that I want to talk about that I have learned, this might be one of the most important of the 10 things on the list, and that is behavior matters more than markets. Now, I spent the first couple of years in this business trying to learn how the markets worked. When I started, I knew a little bit about the investing. I had a financial advisor. I had investment accounts. I was contributing to IRAs and things like that. And so I knew a little bit. I knew the power of long-term investing. I'd seen the charts in the 10-year and if you just leave this alone and let it sit for 20 years and keep investing, you're going to be a millionaire, all those things. But I didn't quite know how all the markets work. I wasn't really tuned in with all the things and wasn't really paying attention. And as I started to learn more, the first year was just kind of getting my head around what we were doing, getting licensed, getting the Series 7 and the 65 and all the things that I had to do to operate in the industry and the role I was in at the time. I started to learn more about technical investing, which is all the charts and graphs and patterns and things like that. Started to learn more about fundamental investing, which is where you're reading the company's financials and you're making investments based on how well the management team is running the business and the free cash flow and the dividend growth and the growth potential over the next 5 years and the analyst forecast and earnings and all these things. And I used to think that that's how you made a decision on your investments. And when things were going sideways or south, or you didn't like what the management team said for the quarter, sell the investment, try to, sell high, buy low, all that fun stuff, actively trading accounts and things like that. What I've discovered, certainly, this really hit home for me in 2018, which was not a fun year in the markets. 2020, which had its moments earlier in the year because of the pandemic response. 2022, which is where the Fed started significantly increasing interest rates. We peaked inflation at 9.1%. The market finished the year down about 19-20%. So not a great year. What I have learned, here's the lesson: behavior matters more than markets. And what I mean by that is investments go up and investments go down. And over the long run, they tend to go up more than they go down, especially if you're buying things that have a quality investment thesis. If you've built your buy-sell discipline, which I've talked about on other episodes and I won't go into here. But if you know what you're buying, why you're buying it, what it's supposed to do for your portfolio, how it fits in the mix, how long you want to hold it, what you want the expected return to be, or what you do expect the expected return to be. Your behavior should be that of a long-term investor and not as a short-term trader, meaning that your ability to be patient when the market is punishing itself and not feeling the need to quickly go to cash or quickly sell something or quickly make a bunch of changes or do, big things. As I've said in the most recent episode, it's one thing to shift the position to be a little more defensive, especially when markets are volatile. And that just gives you a little bit of a smoother ride, but it's quite another thing to completely sell out or completely need to go to cash or try to time the market and things like that. So your behavior as an investor matters more than what the market's doing in this very moment, because if you can manage your emotions about your fear of loss and around your fear of loss in the markets, you will win the game long term. Behaviors matter more than markets. The second thing I've learned in 10 years in this business is that most people don't actually want a financial plan. They want financial clarity. I used to think, now I've been truly in financial planning since 2018. The first couple of years, it was more investing. Started financial planning at the very end of 2017, became a CFP in 2020, had to spend a couple of years gaining financial planning experience before I could sit the exam and earn the marks there. The CFP board has several requirements on certified financial planners before they can actually sit the exam and then be awarded the marks for passing the exam. There's an education requirement. There's a degree requirement. There's active hours requirement, and then there's a coursework and capstone requirement, and then you sit the exam. And so I had to gain 4,000 to 6,000 hours of financial planning, so it took a couple of years to get there. But anyway, I used to think that if you sold the financial plan, and I'm going to come back to that word sold in another topic, but if you sold the financial plan right, people would want it because they would be able to see how well they're doing. They would see what their projections are, and then they would change their behaviors and spending patterns and investing patience and things like that. So that way they could get to where they said they want to go, which is some sort of retirement at some level with some amount of money. Nobody wants a financial plan. I eventually got to the point, and I still do today, where I tell clients, part of the process that we're going to take involves writing a financial plan. It involves writing a statement of financial purpose. It involves me telling you where you stand financially. It involves some projections. But as soon as I hit print on that plan or email it to you, the plan is worthless. It's a doorstop. It's shredded paper. It's whatever you want it to be. It doesn't matter because it's now old. It's outdated. Something moved. The market moved your account statements or your account balances. You got paid. You spent money. You made a decision about something financially that you've been wrestling with. Your kid needed to borrow $100, or you are sending the tuition check, or whatever. A lot of things are happening in your life, and so that financial plan is a report card of what's already happened. You're going forward. It's now stale information. So it's not the plan that matters. It's what we do that matters. The quote I take with me all the time is Dwight Eisenhower's quote when he was general in the Army. He said that plans are useless, but the act of planning is indispensable. Plans are useless. The act of planning is indispensable. And I think that's so true, because it's important that we continuously do planning. And it's important that we focus on what we're trying to accomplish rather than putting it all on paper, giving you the plan, and then feeling like we've accomplished something. So financial clarity, though, that's what everybody wants. That's what everybody's seeking. We talk about it in terms of planning and projections, but people want to know where they stand financially and what they need to do to go forward. And they want to understand the language of money and of what it means, what a lot of the terms mean, what the direction means, what the lines mean, what if something happens, what that means. They want clarity, not the plan itself. which leads me to number 3, which is related. Planning only works if it's ongoing. So this is the third thing I've learned in 10 years. Planning only works if it's ongoing. The reason why, not to beat a dead horse or to be redundant with point number 2, is I've had people who will say, well, we'll try your process, we'll do it for a year and see where it ends up. And I will tell those people, if you only want to do it for a year, we are not going to do ongoing financial planning. Instead, tell me what you want to accomplish. I'll give you some projections and some steps, and you can go do those things. Because what it tells me is if you want to try it, it tells me that you're not fully invested in what you're saying you want to accomplish, or you don't have a really good understanding of what it means to be ongoing in a planning engagement, working on things that happen. And that's the industry's fault, I think, more than it's a lot of people as a general public's fault. Because the industry has taught you that you buy something and then you go away, and then you buy something and then you go away, and then you buy something and then you go away. That's not how it works. You're not buying a financial plan. You are investing in somebody who is guiding you to where you're trying to go. This is one of the most important investments that you'll make in your life, especially with my focus with business owners. Having somebody who is looking over your numbers from a third-party perspective outside of your company. We're not snowblind by what's in front of us and what's happening in the day-to-day in the walls of the office. We see things from a bigger picture, and we can help you tie it all together. That is invaluable. It will get you further down the road than if you don't do a planning process that's ongoing, and that's what's important. So when you're doing financial planning, especially with Life Moves Wealth Management, we write a 1-year advisory agreement. And it's not we're just gonna do it for 1 year and then we'll see if we want to renew. That's really not how it works, because if we're doing it right, if I'm doing my job right and you're doing your work right, we don't even really notice that there's a renewal period. I'll reach out to you and say, hey, it's time for your annual meeting. I want to talk about all the progress that we've made over the past year. Now, my clients are very fortunate because we meet a couple of times a year, not just that once a year. For other advisors listening, or other people who have other advisors who only meet with you once a year, take note. My clients are hearing from me actually monthly, because they're getting an update on one of the areas of their financial life every month. And we're having discussions throughout the year as things are moving for them. And then we have an annual meeting where we celebrate progress. We talk about what's coming up next. And then we review their statement of financial purpose and make sure it still applies. And then we apply that to everything that we want to accomplish in the next year, and we just simply keep going. So planning only works when it's ongoing, not when it's we'll wait and see, and maybe we'll keep going and maybe we won't. If you're wishy-washy about it, you won't get the results you want. It's just like anything else. It's no different than if you're on an exercise plan or a diet plan or a healthcare plan or a performance review plan, anything like that. If you're not consistent, and you're not committed, and you're not doing it on an ongoing basis, it's not going to work. Plain and simple. The fourth thing I've learned, 10 years in being in this business, is cash flow is king for both businesses and for personal finances. I talk a lot about cash flow in a lot of the episodes on this podcast. You can go back and find all sorts of topics about cash flow, including the recent one with Abron Villegas, where we talked about working capital in your business. Free cash flow in your personal life and in your business life allows you to build a solid foundation and a beautiful structure on top of that foundation. Just a couple of episodes, I talked about what to do with your next dollar. And I talked about it as in the form of if you're building a house. That was the example I used. And we went through everything from setting the foundation to the subflooring to the walls to the roofing structure and all of the above. We went through that whole process. Free cash flow gives you the flexibility to do the things that you want to do. Not only to spend and to travel and to buy houses and cars and all the stuff that happens in your life, it gives you the ability to make solid choices. It gives you the ability to invest. It gives you the money to save. It gives you the money to contribute to a retirement plan. It gives you the ability to contribute to an education savings for your children or your grandchildren, or your nieces and nephew or somebody else that you care about. It gives you the ability to bless other people by giving through a tithing program or to non-profitable charities in your community. Free cash flow actually gives you time to volunteer into those areas. And I am a big believer that you need to be a contributor to your community, not just a consumer of the resources in the community. And so you have to give back. You have to participate. You have to be part of the change that you want to see in your community, which means your hands and feet need to be moving that direction. They need to be helping people. And free cash flow gives you the ability to also give and resource other people to get somewhere where they want to go, to give them a hand up, not a hand out. Right. And so that's important to me. It's actually a part of my personal financial purpose statement, is to be able to give freely. And I believe that not only just in words, but also in deeds. And so that's important. Cash flow is king. In your business, it's going to give you the ability to pay your people well. It's going to give you the ability to not be strung out to your vendors. It's going to give you the ability to invest in growth and innovation. It's going to give you the ability to expand, to potentially take over another struggling competitor. It will give you the ability to win. It also will give you the ability to have a company that has transferable value, that gives you the ability to have a successful exit strategy, whatever that looks like. There's multiple ways to do that. We've talked about that on other episodes as well. But free cash flow gives you the ability to build something that lasts. And that's the most important thing that you can do as a business owner, is invest in your people, build a company that's bigger than you, is beyond you, doesn't require you to be functioning profitably, and creates a situation where it has transferable value to somebody else. Nobody wants to buy your job ever, but they would be interested in buying a profitable business that they can run just as successfully, if not more successful than you have. And that's very important as a business owner. The fifth thing that I've learned in my 10 years in this business is the word and. And this is a financial planning thing that I've talked about in other episodes as well. I firmly believe in the word and when it comes to planning, because sometimes we have to understand that financial choices don't need to be an or proposition, meaning should I do this or that? Sometimes there really is only one clear choice that's better than the other. Sometimes it needs a little bit of both. Should I save or should I pay off debt? Maybe there's an and component to that. Maybe we need to focus on one over the other over this period of time and then shift the focus. This is where we keep personal financial planning personal, because it really depends on what's happening with you. But where I apply and the most is not just in financial choices, but in the mindset of, do I sacrifice now and save everything I can so that I can enjoy all the life that I want to enjoy later on? Or there's another school of thought that is, while I'm living, I should be enjoying myself, and I will save a little bit of money for later, but I don't know if later is going to come, so I'm going to enjoy what I have while I have it. And I think that there's an and for both of those, meaning I think you should be able to set yourself up to enjoy life while you're living it in the moment, and set yourself up to enjoy the future you that you want to have fun with as well. So we don't want to spend ourselves silly so that we were destitute and dependent on the government and other people when we're older. And we don't want to not enjoy life now because we're not giving ourselves permission to spend until retirement, whatever that word means to you. There's an and. Enjoy life now and prepare yourself for the future self that you will become financially. So there it is. Number 6, this is the 6th thing I've learned in 10 years of being in this business. And this one's kind of personal, which is, honestly, I could make more money selling financial products. If I were the kind of guy who was selling insurance, life insurance policies all day long, or annuities all day long, or privately held REITs or private investments or things like that, where there's huge 5, 6, 7% upfront commissions, I could be making a lot more money. I really could. And I've simply chosen not to. And the reason why is because I don't want to sell stuff. I don't want to be the guy selling financial products. I don't want to be the guy that sold something, got a commission, and went away, and then calls you in a year and tries to get you to buy something else because sure could use another commission. I don't want to be the guy that you see in the grocery store and you go down the other aisle to avoid me. I don't want to be the guy who has the reputation of being the kind of like shifty, salesy guy where, every conversation is going to lead to, the opportunity for me to sell you something. I want to be an advisor. I want to be a financial planner. I want to help people be financially successful. And that means I want to be in the position to do things that are in your best interest ahead of my own interest, which is the reason why I chose to become a certified financial planner, because it's the only designation in the financial services industry that requires, as part of its top 2 duties that I owe clients, it requires the fiduciary standard. I don't get to choose if I'm acting in the suitability standard, which means that this may or may not be immediately in your best interest, but you qualify for it. It fits your financial profile and your risk preferences, and I make money when you do it. So yeah, this works. No. I'm required to operate at a higher level of care and a higher level of duty of care, putting you first as a true fiduciary in everything that I do. It's also why when I launched Life Moves Wealth, I chose to go fee only, which means that in nothing that I advise on, there's no other form of compensation that I can receive other than from the client directly paying me. So I can't take money from the mutual fund. I can't take money from selling an annuity and earn a commission. I can't earn a commission from selling private mutual funds. I can't take a commission from earning private placed funds. I can't even be a realtor and earn commission outside of Life Moves Wealth. Crazy, right? But that's what I chose because for me, the conflict of interest needs to be so transparent that it's not even there. So I'm removing the conflict of interest that's often associated with selling products in this industry. So I could be making more money. I simply choose not to because it matters to me to be the person in the world who has the reputation that I have, that I've earned, that I know I can sleep well at night because I'm not putting people in financial harm on purpose or incidentally. And I know that what I'm advising is because it truly is what's right for my clients, not because I get a benefit. My benefit is that they continue to be clients and that they continue to trust my direction and my guidance. And my clients are very, very good at referring people to me for that reason. And it matters. So that's it. I can make more money selling products. I don't want to. The 7th thing I've learned in 10 years of being in this business is that you can't want success more than your client does. And this is a hard one for me because there are times, there are people who we've chosen not to work together. Some have chosen not to work with me, and I've chosen not to work with some of them because I want it more than they do. I can see something that needs to be moved and adjusted and changed, and that would just be so good for them if they would just trust my guidance and instinct on this. And they simply choose not to for various reasons. And it's really hard to watch somebody continue to make choices or make an alternate choice when you know that the better thing for them is maybe the harder thing over here, or maybe the uncomfortable thing over there, or just simply a change in lifestyle or a different approach about how they think about money, or to get them to understand that the way that we invest at Life Moves Wealth is not for rapid shoot the moon growth. We're not speculators. We're long-term investors. We're probably going to lag the S&P 500. We're supposed to. We're going to work to beat our benchmark, which is not an index, not one of the three big indexes. Sometimes we're going to beat the S&P 500, but that's never the goal. And to get people to understand that the market moves funky, it moves up and it moves down. And we don't go down as far as it does, and we don't come back as fast as it does either. And some of that behavior, again, back to point number one, behavior it matters more than the markets. Helping people stay focused, stay patient, stay on track, and see a bigger vision. It's a lot of work, and sometimes it's very mentally and emotionally draining. And I just more and more realize that I can't want it more than they do. And sometimes you need to let people sit with that. Sometimes they come back when you've shown them what's possible and they've made an alternate choice, and then they realize that they could really be in a better position, and they've got to want it. And again, that's just like anything else. You want to be successful in any point of your life with anything that you're trying to accomplish. You've got to want it more than the person who's guiding you doing it in order for that to work. All right, the eighth thing I've learned from 10 years of being in this business is that clients may not remember what I said or the details about their plan or what was in the newsletter or how I explained what's happening with the markets and the economy and the Fed and the president and tariffs and all this stuff. They're always going to remember how I made them feel. And I want to make them feel all the time, all my clients, I want them to feel like they're making financial progress. And I want to be able to show them how well they're doing, because people will sometimes underestimate how much they've made progress. And I have the unique ability, because I've been tracking them for a couple of years, several years, most of them now, and I know where they started, and I can show progress. And yeah, the market's going to move down, and sometimes our account balances are lower than they were at a prior point, and we get upset about that and all those fun things. But I can show them progress, and we can see how things have moved up, and we can see how they've made good choices, and we can see places where they've accomplished very important things for themselves. And it's given them the ability to now go to other things. And it's a lot of fun. I want them to feel good about the work that we're doing together. I want them to feel like they have financial clarity. And I want them to feel good about the choices that they're making. Because again, financial planning is not about permission. It's about empowering you to make financial choices that are good for you, and good for you long term, and good for you short term. And that's how I want people to feel. I want them to feel empowered, and that they're able to make progress. The ninth thing I've learned in 10 years of being in this business, and this is for anybody who's building a business or currently a financial advisor, if you're listening, whatever it is, find your real niche. Define very tightly the kind of people you want to work with and how you want to work with them, and then go all in. And I'm going to tell you, it's going to be slow going. It's going to feel painful. You're going to see other people who are growing faster than you doing other things. But realize that those growth patterns, especially if you're comparing yourself to other people, and maybe this is like 9.2, don't compare yourself to other people or other practices. This is something I've had to really think about. I have to stop comparing myself to other financial advisors and what they're accomplishing and how big their businesses are and how much money they're making and how much money they have under management, all those things. Because frankly, what another advisor is doing doesn't mean anything to me. It's not relevant to Life Moves Wealth. I have to focus on myself. So I figured out who I want to work with. I put the tools in place to serve this at a higher level, which means I'm spending more money to provide a higher level of service, and I'm going all in. And that's all I'm doing. I'm focused on business owners. I'm focused on business owner financial planning. I'm focused on helping them build businesses that are built to last so they can have successful exits through the lens of financial planning long term. We're making good decisions. We're cleaning up our financials. We're doing all the right things. We're running the business profitably and with a fiduciary duty, because as a business owner, you have a fiduciary duty to that business, whether you realize it or not. And so figure out who you want to work with, how you want to do it, and go all in. Don't go half in. Don't say you want to do this, but then focus on something totally outside over here. Find what works for you. Find where you're going to serve these people the best, whether it's dentists or architects or specific businesses or general businesses, or you want to be the advisor to financial advisors, or you want to work only with commercial companies because of the work that you do, or you want to work only with realtors because of the work that you do. Whatever your niche is, go all in and go hard and go win in that particular area, because the more laser focused you are, the more those people are looking for you. Be a specialist, go all in. And finally, the 10th thing I've learned in 10 years in being in this business is, I kind of laugh about this, and I gotta make sure I speak about this delicately. I am an ambitious person by nature. I am an impatient person by nature, and I'm mostly impatient with my progress and the level of ambition that I have. So a couple of years into my career, really started to understand what I was doing. I knew how to do it well. I was doing a lot of work. I was not yet a financial advisor, but I was doing a lot of work that an advisor would do. I was talking to clients. I was sitting in meetings. I was building investment recommendations. I was the co-chair of an investment committee that directly interacted with 4 or 5 financial advisors and 11 in total on the periphery. There were 5 or 6 out who kind of worked with our group. And so I wanted to start serving a group of people as an advisor. And I was told that if I wanted to do that, I needed to go find my own pond to skate on. And I got to tell you, the best decision I ever made, this is the point, is I found my own pond to skate on. And more importantly, I dug the hole, put the water in, and then froze it and started skating. I built it myself. I had a lot of help. I have a lot of mentors. I have great clients. But I found the pond to skate on, and I would never, ever go back. And I think this is important, because when you're building your career and you're talking about what you want for yourself, don't base your career decisions or lack of decisions because of what someone else has in mind for you. You've got to create a way to be ambitious. And I realize that there are people who are going to listen to this who are employees of another, of a company, or they're managers of a company, or they're senior leaders of a company. And it's not in their structure. It's not in their wheelhouse. It's not in their nature. It's not in their personality to jump ship and go create their own thing. Sometimes it's financially irresponsible for certain people to do that because it's not how they're wired. And that is perfectly okay. But even if you're an intrapreneur, you're working inside of a company to make that company successful, own your career path. It's your career. Make it what you want it to be. Don't wait for somebody else to give it to you. Don't wait for it to be handed to you. Manage it. Build it yourself. If you're the entrepreneur type, go build it yourself. Don't wait for somebody to give you something. Own it. And by the way, save all your documentation when you're having these conversations, because you need to be able to firmly stand your ground, and sometimes documentation helps. And I know I've been threatened with lawsuits and all sorts of stupid stuff because of the career choices that I've made and the decisions to go out on my own. And even the decision to move to Arizona was a bit dicey. And so save your records, stand your ground. If somebody threatens you, stand your ground professionally, know what you're worth, and be willing to go get it. And so that's the 10th thing. Find your own pond or dig it yourself and go do it. Own your career. Be in charge. those are the 10 things. There's certainly a lot of other lessons I've learned, in the business, because it's not only just the activity of, running the business and having client meetings and reading research and reading books and going to conferences and, chit chatting and networking with other financial advisors and doing everything I can to learn as much as possible. But I'm also, the people I work with are business owners. So it's best applied that I do the things that business owners do. So I own my business. I own a nonprofit. I work in other businesses in an advisory capacity. I read financial statements. I create and monitor my own financial statements. And I'm always looking at other businesses, especially businesses that are for sale, because it gives me really good, real things to analyze and to think about and to think through and to figure out, how to make a business have transferable value. And so I think that these things are important. And like I said, there's a lot of other things that I could talk about, but I think that those are really the 10 things. It's been a fantastic 10 years. I would never want to do anything different at this point. I love the work that I do. I love being a business owner. I'll probably at some point own a couple more businesses because it's fun to do that, and it's fun to lead other people, and it's fun to grow the business that you're in, and Life Moves Wealth continues to grow, and that's all good. But I love the work I do. I love the clients that I get to work with. I'm honored every time that we meet and they are implementing the guidance and we're having a collaborative conversation. I love some of the feedback I get from them. I love seeing their progress. I love hearing how they apply their statement of financial purpose. I'm just really fortunate to be in the position of trust that I'm in the area of finance that I've chosen to work in. And it's truly, truly cool. So, if you're looking for something in yourself that you want to be passionate about, think about what you're doing professionally. Think about where you're going professionally, and think about the road that you're on, and make it the best one possible. Like I said, I've loved. I'll tell you, a good chunk of the 10 years has been really hard. Building a business is really hard. Starting from zero with no clients is really hard. And growing it to where it is now and maintaining clients and serving them at a level is still really hard, but it's also very, very rewarding. And that's what you want to find for yourself. So that's it. I hope you've enjoyed these 10 things. If you want to talk about any of the 10 things, reach out to me, info@lifemoveswealth.com. If you want to talk to me about your financial situation, maybe you don't have an advisor, maybe you do have an advisor and they're not doing the work that I'm doing with clients, especially if you're a business owner, chances are your advisor is not doing the work that I'm doing. Let's have a conversation. So go to lifemoveswealth.com, hit the schedule time with me button, go to the Boss Method page, learn about how I approach business owners. Because again, I'm not building financial plans. I'm not building projections. I'm not building just investment strategies. Everything we're doing is giving people financial clarity. And that's what you really want. So that's what you're going to get when you work with Life Moves Wealth. So anyway, questions, comments, definitely like this episode, share it with people. Like I said, it's been a lot of fun for me. Hopefully it was fun for you. And I'm happy to help you at any point. So that's it. I'm going to stop rambling. Until next episode, go be a boss. Take care of yourselves. Be financially awesome. See ya. Thanks for listening to this episode. Be sure to like, subscribe, and share. To learn more about your financial purpose, visit lifemoveswealth.com.